Hi everyone, Beach House Guy here live in my St. Pete Beach Coastal Christie's office with my good friend Steve Kelly today for Wednesday Wisdom with your local mortgage broker. Steve, welcome, man.
Thank you very much.
Good to see you. Have a seat, let's chat. How you been?
Great, how are you?
I am awesome, thank you. So tell me a little bit about All Western and what you do.
Okay, I am with All Western Mortgage. I've been in the business for just under 30 years.
That's a short time.
Yeah. And I've been through a couple of the crashes and stuff.
I'm sure.
We do all the different loans. We do the VA, FHA, conventional, jumbo, all that kind of good stuff.
Okay.
We have a ton of different products, and even the hard credit people we can help out.
What's the most used product today, would you say?
Right now, I would say for people with credit challenges, we're using FHA.
Mm-hmm.
Vets, I love doing VA loans because I'm a vet too. So
that's awesome.
We do a lot of those.
You hear that? He's a vet.
And also we do a lot of conventional loans. Obviously.
Okay, so what is the most popular loan today, would you say?
Most popular loan, especially along the beaches here and with the condos and everything, is a conventional loan, putting down 20% so they don't have to pay mortgage insurance.
Okay, tell these guys what mortgage insurance is and what you have to look out for and what you do, and most importantly, how you can drop it when you're done.
So mortgage insurance is like gap insurance on a car. It actually helps the lender if the property goes bad, if they foreclose or something like that.
Okay.
But it does, mortgage insurance, even though it doesn't really seem to help the buyer, it does help keep the rates down because it hedges the risk.
Okay.
And it moves in risk increments of 5%. So if you're only putting down 15%, mortgage insurance isn't that bad. 10% is a little bit more. 5% down, it's even more.
Okay.
Right. Obviously, if you put down 20%, there is none. Once you have a mortgage with appreciation in the area, it's actually you can get out of the mortgage insurance once you get to the 20%.
How long does that usually take?
Well, the banks look at the purchase price.
Okay.
And they look at what the original price was and how you paid it down, which takes a long time.
Of course it does.
But with the appreciation, that gap is being spread a lot faster.
So the equity is going up.
Exactly.
Got it.
About 2 to 3 years usually is what I'm seeing lately.
2 to 3 years to write it off and to be done.
To get rid of the mortgage insurance.
Awesome.
I'm refining people when they're not, when the bank isn't doing, what I tell customers who have a conventional loan is to call the bank first and say, hey, can you do an evaluation on it? And if we're at 20%, we can knock it off. Now, if you don't do anything and you forget to call the bank at all, and you keep paying on it, once you have 22% buildup of equity, it's by law has to fall off.
Okay. So the big buzzword today, as we're all talking about, in the real estate industry, people are scared of recession. I know the indicators, I've seen them, whatever. Can you talk a little bit about how, first of all, interest rates, if they do, as we were told, going to be dropping sometime this week, does that affect, is it inverse converse relationship to what's happening in the marketplace, and where do you see housing changing over the next year to 3 years?
Okay, so first of all, the rates are kind
That's
of...
a lot of questions.
It is, it's okay.
Right,
the rates are kind of going like this a little bit with what's been going on with the China and Trump and the Middle East and all this kind of stuff. So we see a lot of those fluctuations. The Fed's actually meeting today. We're expecting the rate to be cut again.
Today?
Yeah.
Okay.
And but
how much? Little?
Probably a quarter.
Okay.
But the market's already adjusted for that.
Okay.
So the rates have already kind of adjusted for that.
Okay.
So the rates are still good. I mean, they're in the 3s and 4s still. We're still going back and forth through them.
Which is nothing. It's cheap money.
It's good money.
Yeah.
Yeah. And then people should be doing fixed rates instead of ARMs, I believe.
Okay.
Unless the ARMs are really a great rate, because fixed, you're fixed for 30 years, or you're fixed for 15 years.
Okay.
ARM, it's going to adjust later, and we have such low rates right now. There's not a big difference in the two.
Okay.
So
a question for you: are you doing a lot of construction and rehab loans?
We do some renovation loans.
Renovation loans, sorry.
Yes,
okay.
yes. I used to be a renovation specialist a long time ago and just did them. A couple things when you're buying. I do want to tell everybody, when you're buying a property, even if the property is perfect, you can rehab a property to what you want. If it's in the right school zone area, it's close to work, and you're like, this is great, but the kitchen's wrong.
Or if you want to buy a beach house, for example, and you want to rent it out for the year, whether in some sort of investment sake, but you need to do some work to it.
Exactly. And some of these, and a lot of realtors will list on their listing cash only.
Right.
And that isn't exactly accurate because you can get renovation financing for an investment property.
Okay, so that's wrong.
Yeah.
Do you hear that, other agents and brokers out
So,
there?
and it'll
Don't
actually
write that on your MLS sheets.
it'll actually help them sell more houses because you can do, instead of having somebody pay 100% of their cash, they can put 25% down, 25% down, and they can buy 3 or 4 of them rather than just one.
Okay.
And our loan goes off of the acquisition cost, which is the purchase price plus the renovations.
Okay.
And then we do a percentage off that, not off of just the purchase price. And we don't care what that property, we don't care if it's in bad shape. We want, the appraisals could show us what it's worth after all is done.
Okay. Perfect.
So it's a great way to get more business. And it's a great way to become a landlord and have more properties.
So 2 questions for you. People want to reach out to my buddy Steve at All Western Mortgage. How do you do that?
You can go to my website. You can go to I'm at 727-415-1842, allwestern.com. I've got Facebook.
LinkedIn, Twitter, Instagram.
I'm on all those social medias. So
Just figure out how to use them properly. But yeah, of course,
Yes.
And then last question I have for you, most important question. What jazzes you the most when you wake up in the morning?
With business?
With anything, life, business, whatever.
Well, first of all, I think we live in paradise here.
Okay,
I
totally
think
agree with you.
I think, especially, and as the winter months come, people are going to be.
See, look at the background, everybody,
Yeah.
paradise.
This is great, and you can definitely live here and afford here if you just plan it right. And I love helping people come here. There's so many people that come here for vacation,
Right?
and they're like, oh, I wish I could live here, and then they
And they can.
and they can't.
Yeah,
I mean, they
absolutely.
can afford it.
Thanks, man.
Thank
Good
you,
seeing you. Cheers. Have a good day. Beach House Guy here, live with Wednesday Wisdom with my good friend from All Western Mortgage, Steve Kelly. Thanks. Have a great day.
Thank you, man.